Hello everyone, it's Sage and welcome you all to our Property Talk segment, 20 minutes roundup, and today we're very lucky to have Mr. Anthony Aoun, the director and founder of AffordAssist, and we bring you the industry leaders, successful business owners, market and equity advocates all under one roof to help you discover the insights of the stock markets and help you understand how one can create multiple passive income streams. So today, as I said, we're very lucky to have Mr. Anthony Aoun, the director of AffordAssist. And to give you some background, AffordAssist helps people achieve their goals of buying their first home with little or no deposit. They've been operating for approximately 5 years in Sydney and now making their way into Queensland and Victoria as well. And they're running some buyer affordability seminars around Sydney. So do head to their website, AffordAssist.com, to find out more about these free seminars.
Hello, Sage and the team at Kalkine. Thank you for the opportunity to have a discussion and share some real estate insights with your viewers.
It's a pleasure to meet you. So let's get started with the questions. So we've seen how the Australian first home buyers increased their market share substantially in 2020 amid the low interest rates and a range of first home buyer incentives. However, many Aussies still struggle to overcome the hurdle of arranging funds for the initial property deposit. How does AffordAssist come into play here, please?
Yes, Sage, there is an increase in first home buyers. That is so good to see. The government incentives work well. Home builder grants have now ended. There are 121,363 applicants for home builder grant Australia-wide. Amazing uptake. We still have the first home buyer. Australia's first home buyer ownership, in our view, is still in crisis. Real estate values are increasing at a greater rate than household incomes, making saving for a deposit increasingly more difficult. Our estimated home buyer demand range between 60,000 and 100,000 per year. There is still a significant number unable to save for the deposit, causing many buyers to miss out. AffordAssist was created for this very reason, to be part of the solution to help increase home ownership in Australia. We feel home ownership is a fundamental right of all Australians, impacting on our social fabric and economy. And more than ever, first home buyers need a solution like AffordAssist to get into home ownership. AffordAssist offers an innovative property deposit and loan deposit solution, making it possible for buyers wanting to enter the market today. With AffordAssist, buyers do not need the 5%, 10% or 20% deposit. First home buyers may purchase with as little as $10,000 cash deposit, an investor with as little as $20,000 cash deposit. How do we do it? AffordAssist replaces the need for the typical 10% cash deposit required by the property seller. A proprietary deferred deposit agreement, the acronym is DDA, which may be used for part of or the whole deposit and includes a no interest payment plan. AffordAssist offers a list of approved properties also.
Okay, thank you. Some very, very valuable insights and information there. Really appreciate it. Along with the property deposit support, how is AffordAssist's innovative loan deposit solution helping the home buyers choose their dream home?
Matching the property deposit with the loan deposit into one solution is critical to ensure buyers can secure a loan and settle on their property. This has a growing panel of approved lenders and mortgage brokers who recognise that AffordAssist will be used as part of or for the whole deposit. When assessing eligibility and maximum property budget, all assessments are at arm's length and follow lenders' duty of care. At present, our panel offers loans up to 90% of the property value. Also, our eligibility process is very easy. We remove the deposit barrier. This means the eligibility to secure a loan is based on annual income.
Okay, so buyers do have to have a good credit score, a credit rating.
It's
And
exactly the yes, correct, Sage.
Mhm.
It's not stepping outside of lending guidelines at all.
Okay.
What we've basically done is remove the need for the deposit, which has been a barrier for many people. And the entire assessment now is based on the household annual income, whether it's 1, 2 or 3 applicants.
Okay. And if you do not pass the first time, are you prevented from applying again, or could you try again?
No, I think the advantage of actually speaking with a broker earlier is the brokers can then give some guidelines about how to better their position moving forward. And sometimes people lose hope on getting a loan, Sage, and they say, you know what, you may as well rent forever, you may as well buy a car, because they feel they're never going to get there. But knowing that they can now get there, the mortgage broker can say, you know what I suggest is you do this, this and this, and then they can put them in a position to be ready for a loan in the future.
Right, okay. So what are some of the critical hiccups some home buyers face, and what are the focus areas that AffordAssist looks at, please?
This is a very insightful question, Sage. From our experience, buyers face differing concerns, emotions and attitudes. Allow me to give you some examples. Some buyers may think, I may never save the deposit to get a loan. Some may think I may never break free from renting. Some may think I do not deserve my own home. Some may think the property market is so unstable, prices are too high, buying off the plan is just too risky. Better to wait for the perfect conditions. Some may think, will I ever be able to give my family a safe and stable place? While others may think, will I ever experience the Australian dream of home ownership? We offer educational style seminars for buyers to learn how AffordAssist makes it possible. And we cover market knowledge with a focus on what influences the increase in property values. We also offer tools that include the Fast Track Calculator and Fast Track Form. These services we feel help buyers in preparing their readiness to get into the market.
Yes, so from what you say, it's mindset and then also being organised financially that will help the new buyers.
Very interesting question you raised, Sage, because it's not just they can afford it. Sometimes there's a mindset behind it, whereas others feel they're ready in their early 20s. And we've met people in their late 40s, early 50s that thought, you know what, I didn't think I could never do it. And it was interesting just listening to their attitudes behind. They want to be in, and sometimes they're so frightened of how the next step is. And our service has a huge care factor. We help them from the first phone call all the way to receiving the keys of their property.
That sounds amazing. So I'm glad you brought up the age brackets there, because with 30-year loan terms these days and things like that, you think that once you get over 40, you may be, I'd hate to say it, too old to get into a loan like that. Is there an age limit that, that will stop you or prevent you from getting an application approved?
There are a number of factors that mortgage brokers would look at. Age could be one of those things. 40 is not the cutoff.
Okay.
It depends on the household income. It depends on other criteria that the brokers would consider. And I think that's important, that they don't kind of lose hope and say, no, I can't do this, but to actually have a talk with a professional that's going to be on their side, help them with the potential next step.
Okay, thank you for those insights. So on to the next question. Is AffordAssist a private lender or a mortgage broker?
AffordAssist is not a lender or mortgage broker. AffordAssist provides the program management and governance. Mortgage leads are referred to an AffordAssist program approved lender or mortgage broker. As discussed earlier, our approved lenders and brokers are separate entities and at arm's length. Thus, their duty of care and servicing are adhered to as per industry standards and their respective lender process flow. Also, AffordAssist does not have any commercial agreements to earn referral fees from our panel of approved lenders or brokers.
Thank you for that. Well, since you brought up the fees, is there like an account keeping fee or an application fee that's involved with this service?
There is a one-time fee for the use of our deferred deposit agreement, which we've spent countless hours and we've got the best real estate advice, and we've met with government both on federal and state, and we've met with head of banks to bring in a new solution. So I'm really pleased with what we've done to create this document. This document belongs to us. So it's really for the use of our intellectual property. The fee is $1,500 plus GST.
Okay.
In most of the cases, though, Sage, the developers that we work with, for us bringing them a buyer, would pay the $1,500 plus GST on behalf of the buyer.
Okay. And in regards to your developers, the people that are approved, they'd have to go through your team of developers and would have to build in the designated suburbs in Sydney. Is that correct?
We meet with developers and we talk about a little bit about, I think, some of the questions that you posed later, but the developers must be approved, the vendors must be approved, because a portion of the purchase price, the deposit, is put into a no interest payment plan. And at the moment, as we spread the word for the developers to help out the community, to be good caretakers of the community, the government's helping, we're asking developers and vendors to help, and collectively we can help more people into home ownership. Not all vendors or property sellers are able to commit to this commitment at the moment. And as the word spreads, I see, you know what, this is something that we would want to be a part of. So that's how we're building our panel of approved properties.
Okay, great. Thank you for that. So we'll move on to the next question. So can you shed a bit more light on how AffordAssist continues to procure new lenders and to expand the list of approved properties Australia-wide?
So our plans are to offer the AffordAssist service across Australia, and this includes regional areas. To make this possible, we continue building relationship with new lenders and property developers, and hopefully soon private property sellers, which means established properties. Expanding the approved properties to include multi-million-dollar residences or regional properties around 170,000 will help buyers with varying budgets and preferences. So as we continue, we want more and more Australians, and I think it's an Australian spirit, to be honest with you. We have this mateship and we do want to help. And we're finding, every now and then a developer with a big vision for Australia say, yeah, we see what you're doing. We'll give you an allocation of properties. And that's kind of what we're doing with every discussion that we have with a new developer or new vendor.
I'm so pleased that you brought up that mateship aspect of the Australian spirit, because it's so true. If you can tap into that community aspect of what it means to be, Australian and helping a mate out, and sharing your knowledge of your sector or industry, I think that's exactly what it's about. Just one question: would you say that this type of purchase is purchasing off the plan? Is it similar or different?
It's for all property types, though, Sage. It's not restricted to off the plan. It can be new or old. It can be the actual solution can be used on any residential property Australia-wide. Yeah, it's now about bringing the parties together so that they would agree to this style of purchase. Our lenders are on board with it. It's about finding property sellers say, yes, I agree, pay me what you've got, the loan, 90% or more today, and let's have a no interest payment plan for the balance later. It's kind of that approach.
It sounds like a brilliant innovation. To be honest, it almost sounds too good to be true. So amazing. Okay, well, moving on to the next question. Our viewers would also like to know how home shoppers should handle bidding wars, especially given the current property boom scenario.
This is an interesting topic, Sage. I've been in real estate for about 25 years, and my take is this: auctions are a method of sales suitable for certain properties in certain market conditions, and by design are intended to produce the highest possible selling price. This setting, by design, is meant to create bidding wars. Buyers that do not want to bid may want to consider properties that are listed for sale with a known price, which may be negotiated, or secure the services of a buyer's agent.
All right, thank you for that. And onto the fixed mortgage question. Fixed mortgage rates are at record lows, so it is an excellent time to consider procuring a home. or home loan. What are your suggestions for our viewers, please?
Yes, I agree, Sage. It is an excellent time to get a home loan. Rates are at a historical low. We may never see this in our lifetime again. My suggestion is there's no time like the present. Buying a property and paying the loan may be cheaper than renting it. And there is an upside. The capital growth and equity gains may amount into the hundreds of thousands of dollars over the lifetime of living in the property or using it for investment. Also, it's a great way to complement the retirement plans and one super. My other suggestion is, if buyers do not have the full deposit, they may like to contact AffordAssist or join us at our next free seminar.
Absolutely. I'm sure a few viewers would be thinking about doing so on you mentioning that for sure. So while many are concerned over the potential risks of the red hot property market, what is your take on the same? Do you think there should be an introduction of macroprudential controls to cool the apparent housing bubble like they're doing in New Zealand, for example?
My view is we are fortunate in Australia. Our compliances within the real estate industry are a very high standard. Our banking systems, including all lenders, not just the banks, are amongst the best. These processes are not to be taken lightly. They are there to protect all stakeholders. My view on controls, probably too much compliance or manipulation may adversely affect the market. For example, limiting wage growth below CPI. I'm also not of the view that there is a housing bubble. The market has its own organic supply and demand factors. At present, we need more homes built. This is one of the factors influencing the property price increases.
COVID will completely leave our community, and that we will be able to have immigration again and people entering into Australia. That will maybe have an effect on the supply and demand model that we're seeing at the moment, which could in fact bring the prices down again. Is that your understanding of that we're not in a bubble at the moment?
No, that often gets brought up by a lot of commentators, and that word bubble, I think sometimes this is my view, sometimes gets paralleled with the stock market. And property is not the stock market. Property, in my view, is a lifetime purchase. There are people who want to trade in property. There are people who want to use the term investment, and sometimes when one is short in a sell period or short. Property was really not designed for that. There are even some other systems that are trying to make property more like the stock. I cannot see this really in my lifetime.
Okay.
Property is a whole purchase, and in that there are factors within the Australian economic that actually allow property to grow, and has done so in my research, for the last 60 years, consistently, decade after decade after decade. And notice I don't use the term quarter or yearly, because I think there's a danger in looking at these short-term headlines and forgetting the real purpose of a property, and that is first and foremost your home. But we are fortunate in Australia that our economic conditions are such that the byproduct of buying this home is the equity, which amounts into hundreds of thousands of dollars. So if you look historically, 10 years prior, 10 years prior, 10 years prior, you'll see that property has consistently gone in an upward direction.
Yes.
So I would say ignore the headlines for now, because they were around even when the Olympics were on. And the Olympics at that time, if you look at the library and you go back and you say, okay, what were the news headlines? It was like the Olympics were on, but the headlines were saying don't buy property because there's too many properties. However, we are not making enough properties. We're not building enough properties. And if we did build enough properties, it's not so much our immigration. If we build enough properties, then the supply and demand would adjust itself organically, and prices would not be so fearful. Certainly not in an auction, certainly not where developers saying, well, you know what, there's nobody else building but me, so I can put the price the way I want to put the price. So if people are going to come from overseas, it's actually only going to increase our demand, not lessen our demand, which will give developers more confidence to invest $30, $40, $50 million in a project. Because we're moving now and getting developments that are no longer 12 apartments. We're moving into large-scale developments, and some of them could be $500 million. That's a substantial investment in infrastructure and housing. And the people that are buying in Australia, because I guess we've been here a while, and I certainly have always saw value in Australia, see value in Australia because of its economics and many other benefits. And I guess surrounding that is another reason why real estate goes up continually, decade after decade.
I was reading something, and you say not to focus on the headlines, but it did say it's been increasing 3% practically every year, the property market over the last 60 to 100 years. And they're expecting it to even rise by a further 15% by June next year. So,
yes, but look, those numbers, and I'm not arguing with any of the commentators or the statisticians, or, where they look at this historically. But I think if you're trying to time it, and that's a danger, I'm trying to time the market because I want to buy Tuesday morning, or I want to buy this, that's really not the right way to buy property, because in the scheme of things, over 30 years, whether you got a discount of 2% or paid more by 2%, really just it's nothing for property prices. I know, I'm just thinking of some family members purchased their property in 1969, around about that period in Sydney. And they bought their property for $10,000 and the other person bought it for $10,500. Now, most people have got a credit card with more than $10,000 today.
Yep.
If the property was a little bit overpriced or underpriced, it's incidental, because both those properties that I'm thinking of now are worth close to $1.8 to $1.9 million each.
Amazing.
And the property owners didn't really do anything to influence it. They simply lived in a property and owned it instead of renting it. And the rest of it was done for them by the Australian economy. It's as simple as that sounds. Our economy is one of the best in the world, and we should rely on it more and be more confident about buying our home, and rather than picking the timing of buying our home, but have the confidence. They can afford it, get in, and then live in it, and let the rest just happen for you.
Organically, like you say, that's brilliant advice. Thank you so much. And I believe, and correct me if I'm wrong, but the RBA, they're not too concerned about, or APRA, they're not too concerned about the high loan to valuation ratios, or the other metrics concerning the cost of construction, which is comparatively quite low at the moment. Is that correct?
Yes, metrics are important. I think, again, I have so much respect for the Reserve Bank, and like we said earlier, our compliances in Australia are outstanding. And it's because of that we've got these regulatory framework, which is actually fantastic. But I think when we're looking at the comments from the Reserve Bank, and they're very grounded, and you read the comments about real estate and so forth, they don't want to provide reactive solutions. And that's why I'm cautious about trying to manipulate, or people saying, I think we should do this to control. There's nothing out of order. I mean, it sounds like the prices are high, or they're too high, but there are other factors. We haven't had a CPI playing a role in this. It's not the prices. So trying to wish prices to come back down so people can buy and then come back up, I don't understand that logic at all. I think it's good to know the market is strong, find a way to get into the market, and we become all caretakers of the real estate market, because it's going to support us and our families. And when you pass it on as a legacy,
yes,
the next generation has something that they can work with. So anyway, you got me started, Sage.
Well, it's just so brilliant to hear you talk passionately about your company and what you do, because you're so right. I mean, having your house and having that legacy is part of who you are, basically. It's part of your identity. So it's a very important aspect of life.
If I may share with you one thing before we go on to the next question.
Yes, of course.
There are many, Australia is multicultural, right? And I think we've been in Australia for over 50 years, and I just love Australia. I just I do really love it. It's helped us to build our future. And I think if somebody was to buy one property only, just one property, forget the investment. I'm not suggesting they can't. Of course, number 2 is easier and number 3 is even easier. But just buy one property, your retirement and your future and your children's future is vastly different in 20 years from today because of this one purchase.
So the impact it has is it's long lasting. It's not just something you can blow away with a...
No, you look at anybody that's owned property for more than 20 years and there is substantial equity for that person.
Exactly. So lastly, Sydney home prices are skyrocketing right now. A great time to sell, but what advice do you give to the buyers? How can they protect their interests and still be able to seal the deal?
Skyrocketing may be too strong an expression, but yes, prices are on the increase, and they should be. We live in a great country, one of the best in the world, and may I suggest careful consideration before selling. I support the view of never selling. That talk could be for another day, Sage. My advice for buyers would be to get into your own home today. As we discussed earlier, the upside is significant, and with AffordAssist, it is possible to purchase today.
Thank you, Anthony. That was absolutely delightful. I really enjoyed that meeting, and the knowledge you've just passed on to me and our viewers, I'm sure will have a huge impact.
Thank you, Sage, and the team at Kalkine. I very much enjoyed our discussion, Sage. I hope your viewers get some value, and bye for now.
Thank you. So with that, that is the end, and we had a wonderful chat there with Anthony Aoun, who runs AffordAssist by Affordability seminars. They are currently going on around Sydney, and please head to his website, affordassist.com, to find out when the next one is. And with that, it's Sage signing off. As we say, stay apprised and invest wise with Kalkine.